Hello everybody, welcome to the third webinar, the third educational webinar in the BD Forex community. I hope you're all well. Today we're going to be looking at price action, specifically targeting and specifically looking at price action as explained. So what we've done so far is we've had two webinars. We've had one webinar discussing key levels, monthly support, weekly support and resistance, monthly support, resistance and daily and so on. Understanding how to find key levels and mark it out on your chart. So that was the very first thing we needed to look at. That's the very basics when you start trading or start using technical analysis. The next thing on top of that then we add was trend lines, so we can understand what direction the market is going in and give us an understanding of where the market's been, where it could be going, and give us an overall idea of direction. We always need to know what direction the market's going in. Now, before we move any further, one of the main things, along with the first two webinars, is price action, and that's what we're going to look at today. Now, we've done a live stream the other day and explained that price action, there's quite a lot to price action. It's a sort of a large umbrella which you can class many different things under it. You've got price action itself, which we can see in front of us with candlesticks and candlestick recognition. Then we've got price action, which is formations and patterns, higher highs, higher lows, and stuff like that. So that is also going to come in under this sort of webinar, but it's going to have to be in separate parts. Today, what we're going to do, like what we've done on the first two webinars, is cover the basic fundamentals of price action. On the first webinar, we got the simple support and resistance. On the second webinar, we've got the simple how to draw a trend line, how to use it correctly, and now we're going to look at candlesticks, price action, and how to use it. So anything that I do here, guys, you can screenshot or record, make some notes, because you want to be learning from this. So make any notes that you need, that things that I'll write up onto the screen. So first off, what is price action? So price action is literally being able to understand the charts by pure price action. Price action is what you can see in front of us right now, the candlesticks. This here in front of us is basically the market talking to us. It's the language of the market. It's how we interact with the market, and it's the market telling us a story and explaining what's happened in between each interval on whichever time frame it's on. So for instance, now we're on a 4-hour chart, and each candlestick is telling us a story, telling us what's happened in the last 4 hours. Basically, if we start with a daily chart, each daily candle tells us what's happened that day. For instance, let's just take the previous candle here. So we can see, yes, the previous day we pushed down and pushed all the way back up. So the daily candle is telling us something about that. Then we could drop down to the 4-hour and understand how it happened in the day. We can see that there was a big bearish 4-hour push down, and then we can see there was a slow push up afterwards. So, and then if we want to drop down lower, we can delve into that a bit deeper and so on. But basically, price action is the market showing what's happened within that time frame, and it helps us understand what can happen next by the candlesticks that's shown. So as I said, it's literally like the language talking to us. If we didn't have technical analysis, if we didn't have a chart, all we'd have is numbers on the screen, and we wouldn't be able to understand that. Luckily for us, there is technical analysis where we have a chart, and so then we can see what price is doing and try to understand it. But now we need to start breaking down to see how to understand it. So what I've got in front of me, Euro GBP chart. I just chose this sort of at random, just to show that on any chart you can basically find the things that we're looking for. So to begin with, what I've got here is a 4-hour chart, nice and clean. So price action, the problem is with price action with a chart is when there's nothing on the chart like this. Basically, if you've never studied Forex before and you're looking at this chart, you won't know what the hell's going on or where we're going. Even if you're new at trading, it's just basically a load of lines, a load of colours on a screen. You don't really understand what's going on. There's no structure. You don't know if it's going to go up or down. And with trading, when you place a trade, at any point, for instance, where we are at now, if you place a long trade, there's a 50-50 chance it's going to go up, and there's a 50-50 chance it's going to go down. It's almost like putting a bet on red or black on a roulette in a casino. It's 50-50. But unfortunately, in a forex market, things are sort of stacked against us because the market can move against us before they're moving in our favor, and it's not quite 50-50. But what we're trying to do as traders is, trading is all about probability. Each trade that we take, we're trying to stack the odds with us rather than against us. We're trying to put the odds in our favor so that we can more, instead of being 50-50, we want to be, say, 80-20 in our favor, or even 90-10 in our favor. You want to try and stack the odds up. So by using things like support and resistance, using trend lines, and then price action, we can stack those odds in our favor. So first off, let me just begin with price action. It's very, very, very important to be able to understand price action, and it's very, very important to be able to see it. What we have, and what I've also see a lot of the time, which you guys may even still do, and you've probably seen a lot of it, is you get this a lot on when you see people's charts. People will have a support, they'll have a another support, they'll have another support, they'll say, oh, there's a support here, oh, actually I see a resistance here. They'll zoom in on the chart, then they'll have a resistance here, and they'll have another support, and then they have all these lines all over the place, which is conflicting, because when you don't just have your monthly, weekly, and daily levels, you have all these levels coming from all over the place, and you could be in a long trade, and then you'll see this resistance level that you've drawn on, and you'll think about getting out the trade and stuff like that. But not just that, it's, as you can see already, it just seems like there's too much on the screen. It's very hard to read. You could have another support level here. Then what people have is we start putting on trend lines. You could say there's a trend line here. You could also say, right, well, actually there's a trend line coming across. We could say there's a trend line coming across down here. Also, you could say, all right, well, I see some Fibonacci. Sorry, guys. We could say there's some Fibonacci. Get rid of that one. Say there's some Fibonacci coming across here. You can say, well, I also see there's a Fibonacci retracement coming this way, and I see loads of charts like this. And you can see here now how price is sort of hidden behind all of these kind of lines, Fibonacci. Other people have indicators, RSI, MACD along the bottom, and all of this stuff. You don't need any of that. Trust me, I've been trading a hell of a long time, and I went through the journey of learning how to use loads of different indicators, thinking, oh, this is the next best thing. Now that I'm using this is going to help me. But you have to go through all of that to realize you don't actually need it. There's so much stuff that you don't actually need. And you see the way that I trade, that is what you need in front of your chart. You need to be able to see price action, and you need to be able to understand price action. When you understand what price action is doing, understand structure and patterns, which we're going to get to, and then combine that with key levels of support and resistance and trend lines, the magic can happen. But you need to be able to see price, because like I just showed you, when there's way too much on your chart, it's very, very hard to see it. So I do like to have a clear chart like this. Sometimes what I do is I just go over to the chart where I have actually got my support and resistance levels that you guys see that I show. There's also sometimes, if you just want to unclog your chart, just have a little look to see. There is a little tool here on the left. It's got like a little eye where you can just click that, and all your drawings go, and then you can pull it back again. But also, it's nice sometimes to have just a clear chart, where you can actually just take a look at it, and then you can be like, oh, actually, you know what? I see something that I didn't see. I can see this sort of head and shoulders formation along the bottom here, but I couldn't see that because I had so many support and resistance levels on. So you can see here, left shoulder, head, right shoulder, and so on. So basically, try to unclog your charts firstly with price action, because when there's too much on your screen, you miss the actual candlestick recognition. You sometimes don't see what's going on, and it hides price action, but price action is one of the most important things. So we've started off with support and resistance, then trend lines. Now this is the next most important thing. So What we want to do today, as I said, going to start off on the very basics, is actually look at the candlesticks we use the most, the ones that you see me talking about day in, day out. If you've been in the group, you would have seen me talk about ones like Morning Star Formation, Shooting Star, and I think even people who have been trading quite a long time have actually been sort of overwhelmed at how powerful these candlesticks can be and how simple it can be if you just look out for them and know where to use them in the right place. So firstly, what I just want to go through again is with candlesticks, support, resistance, and trend lines. The strongest candlesticks, the higher the time frame. Let me just write this up. Actually, the higher the time frame, the stronger the candle. Support, resistance, and trend lines. Very important, very simple. The higher the time frame, the higher these are. If you're seeing a candlestick on the daily chart, it's stronger than on the 4 hour, the 1 hour, and 30-minute, and so on. Same thing with a trend line. If you see a trend line on a weekly chart, it's much stronger. There's a more probability. Again, when we talk about probability, we go from having a 50-50 chance. If we're looking at price bouncing off support, which is a trend line support, if the trend line support is a 1 hour trend line, the probability is low. If it's a 4 hour, probability is a bit higher. Daily is even higher. Weekly is even higher, because these are, the higher the time frame, the stronger that these are. Same with candles, same with support and resistance. That's why we have monthly key levels and monthly support and resistance, because we know when price gets to those areas, there's going to be a bigger reaction. There's more chance of trend line of resistance holding. Let me just show you here visually. You can see here what we've got highlighted in blue, monthly support and resistance levels. We know that they are stronger and there's more chance of them holding as support. You can see here support, resistance. I've took the blue highlighted line off here, but this is also resistance level here. So we can see here that the monthly levels are stronger and the weekly levels are a little bit weaker, and the daily is weaker again. But the higher the time frame, what we're looking at here is the stronger the candle, or what we're looking at today. So when we're looking at candlestick recognition and we're looking at candle formations and so on, as explained, on a daily time frame is the higher the time frame, the stronger they are. Weekly, daily is very strong. So let's just start off with the main candles to look out for. So these are the ones that we look at time and time again. So there is lots of different candlesticks, but these are the ones that we look out at the most. We see these day in, day out, and we see them all the time. Sorry guys, I'm just looking at something. So yeah, we see these all the time, and then the most common, we see them on a daily basis, on lower time frames, higher time frames. But let's just bring out the ones that we use the most. We don't really need, there's lots and lots of candlesticks that we don't see that often. We can get to that in the future, but the ones that we see all the time and are regular occurrence and the most powerful, let's have a look at these ones first. So main candles to look out for on the top of a trend is a shooting star, which I'm sure you've heard me talk about before. We've got an evening star. We've got tweezer top. We've got bearish engulfing. And also doji candles, very important. At the bottom of a trend, what we often see, the opposite to a shooting star is a pin bar, a morning star formation, tweezer bottoms, bullish engulfing, and then again dojis. These are the main ones that really you need to look out for. So you can screenshot that, write that down. These are the ones that we look out for the most. They're very, very powerful, very, very strong, and we see them time and time again. Now remember, if you see this on a weekly chart, if you see it on a daily chart, they're even stronger than if you see them on the 4 hour. So let's look at each of these and understand the psychology behind them, because the psychology of trading is very important. And understanding what the candle's doing, obviously there's spotting the candle, but it's understanding what the candle's doing. So we can look at anywhere on this chart and find some of these. Let's just even have a look on a weekly chart. Let's just see, can we spot any here? Yes, we can. There's going to be more on the lower time frames, but let's just get a nice example of each one. So shooting star, I can see some nice shooting stars here. I want to see if there's more on the daily chart, so it can be a bit more clearer. So shooting stars. Let me just bring this over here. We got lots and lots and lots. Here's a really nice example. This is a textbook shooting star. See this candlestick here? Let's move that up. See this candlestick here? This one here? This is a shooting star formation. A beautiful one at that. And the reason that I'm saying it's beautiful is because we've got this big push up. We've got this big wick. The longer the wick, the bigger the rejection. But then you can see here that at the bottom, we haven't got any wick at the bottom. You can see here that price is just basically, once it's pushed up, it's pushed all the way down, and then it's closed at the bottom of this candlestick. That means the momentum is down, and means that there's a very big probability that the next candle is going to push down as well, because you can imagine we've had that push up and we've had that sudden push down, and where the momentum is on the down, there's no wick on the downside. Literally the candlestick ended as the candlestick ended with price pushing down, and then so we're expecting the next candle just to carry on pushing down as well. So this is a very good example of a shooting star. Now the psychology behind a shooting star is just like I said. Basically, we see these at the top of a trend. We see these very often. You can see price pushes up here. Price is making a run to the highs. Let's just put across, say, a resistance around this level. Price is making a run to the highs. We're coming up to retest previous resistance here, and then we're breaking above. It looks like we're breaking above on the daily. This is the daily chart. This is why it's very important to always watch the daily candle close. That's why we do the evening call at the time that we do, so that we can monitor the daily candle close. It's very important. It always gives us a good view into the next day. So the 10 p.m. close, always write down what the candlestick close was, because just looking at that alone can majorly help your trading as you go into the next day. So you can imagine if you saw this at 10 o'clock, you said, okay, well, I've seen that there's been a big rejection on the day. We've closed here as a very bearish shooting star. It looks like the next day is going to roll over to the downside. Then the next day, you know what your setup is. You can drop down to the lower time frames, look for this little bit of a pullback, and then you can look at taking a short trade. But that is a very good example of a shooting star. Now, evening star formation, we use these loads, especially on the lower time frame. On the higher time frame, they're great if you're already in a trade and you see that the day ends as an evening star. It's a great confirmation. I like to get in before you see an evening star on a daily chart, because here is an evening star formation. 1, 2, 3. This third candle that completes an evening star formation. It's called an evening star because it's at the top of a trend. So imagine like a star being in the sky at night time. A morning star is at the bottom as it's rising. So an evening star is at the top as it's about to come down. So an evening star formation is a great reversal sign, and I'll just highlight it here. These 3 candles here, 1, 2, 3. As I said, I like to see these on the lower time frame. If you see these on a 1 hour time frame, 4 hour time frame, they're quite strong. And the reason they're quite strong is because it's not one candlestick by itself. If you see a shooting star on a 4 hour, is quite strong. Same on the 1 hour, but it is just one candlestick. So on a 1 hour, if you saw a shooting star, ideally what we want to see is the next candlestick to confirm the direction, and then we can take a short trade. But here we can see on the 4 hour, but when you see a morning star or an evening star on the 4 hour, when you have that confirmation, that third candle, it shows you that we've had this big spike to the upside. Then we've had another candle to confirm that we are rejecting this level. We've had a sort of bearish engulfing candle, and then these three together are very, very strong. You can see here we sort of had a morning star formation, the opposite of this, an evening star, 1, 2, 3. They all change in different shapes and sizes. You can see here we've got 1, 2, 3, very big morning star formation. Let's just have a look at how many others we can see here. You can see here at the top of this trend, 1, 2, 3. See how different examples here. You can see here how this bearish engulfing is bigger than the previous, that push up. If you have a bearish engulfing like this, it's even better confirmation. This is an even stronger evening star. You can see we've had this candle here, the third candle, has completely engulfed the first candle of the formation. So you've got 1, 2, 3, and then just off that alone, then you can see, look at a pullback on the next day, and then this has just died, and came all the way back down. So that is the evening star formation. Let me look for some more, because there's bound to be, because they're so that you see them so often. Let's have a look around here. Here is a type of morning star, evening star formation, 1, 2, 3. So it can show you that they can change in shapes and sizes. They're not always perfect, but it's the 3 candlestick combination, and that third candle engulfing the previous candle. If it can engulf the first candle, then it gives an even better signal that price is changing. See here, 1, 2, 3. So go through and backdate and look through, and you see how often you see morning star formations and how well they work. Do it on a daily, do it on the 4 hour, and you'll see how strong they are. So here I'll just quickly go. We've had a look here at the shooting star, and we've had a look at the evening star formation. Now the tweezer top. So tweezer top is basically called a tweezer top because it looks like a tweezer, 2 long legs. These are usually quite more often on the lower time frames. I'm just having a little look here to see if we see any. Here's a nice one here actually. Up here, this is quite a bit of a perfect sort of example as well. You see here these 2 pins. This is a tweezer top. So you can see your price has actually pulled back to form up. So we've got support here. We've broken through. We've had resistance. We've had this daily tweezer top, and then bearish engulfing, which we're going to get to in a minute. It's the next candlestick. But bearish engulfing and a tweezer top. So you've got 2 confluences there, adding probability into our direction, because we can say, okay, well, we come back, we've tested resistance, we've had 1 day, the next day is a tweezer top and a bearish engulfing on the previous day. So then you can look for shorts here, and then you can see here how we've had that big sell-off. So tweezer tops are like that, and then tweezer bottoms are basically the same but in reverse. We'll get to that in a minute, but then we'll look at the bottom trends in a minute. And bearish engulfing. So bearish engulfing, very strong candlestick here. You can see bearish engulfing here. Bearish engulfing is basically telling you price has engulfed the previous candle and overtaken anything that it can do. So you can see here, this is almost a bearish engulfing. We had this big push up on the bullish by the bulls into this resistance level. Then we've had this daily big bearish candle eclipsing the whole previous day, showing that the bears are actually too strong. So you have to understand that the market is always a fight between the bulls and the bears. So it's buyers versus sellers. So you're always looking at who's winning the battle. So you can see here, the bulls are trying to push up, then the bears have actually pushed down. So you now know that they've got control. They're stronger right now, especially on the daily chart. The daily candle is a very strong indication. So let's have a look back through some more time here. Big, strong bearish candle here, as you can see. Eclipsing 1, 2, 3 candlesticks here. So it's a trend changing reversal sign. And then you see all the time. See this evening star formation, 1, 2, 3. bearish engulfing the previous 1, 2, 3 candles. And let's have a look how many more. 1, 2, 3. You see them all the time, yeah, and you just have to condition yourself to being able to know these off by heart. Now, one thing about price action is you have to know this stuff off by heart. You shouldn't have to look at a chart and try and figure out if you can see a candlestick or a formation. You should just know them off by heart, and that's one thing that you need to do. You need to revise them, go and look back. It needs to be second nature, not even a second thought. You need to literally be able to look at a chart and see any kind of candlestick at any point and just know what it is, like it's another language. So they're the main bullish ones at the top of a trend. Doji candles, as you can see here, are very, very important as well. You'll see that we look at them when we're looking at taking trades, and what they do is they give you an idea. So a doji candle is basically the market opens and closes near enough at basically the same point. So basically it opens up for the day, price pushed up, price pushed down, and it pushed all the way back up and closed around the same level. So what that means is the bulls have tried to win, the bears have tried to win, nobody's won, and so that means there's indecision in the market. If you see this at the end of a big push up like this, it's a sign that the market's slowing down. The bulls are losing steam. You can see here the bulls are losing steam. They're running out of steam. They've tried to push up. They've all been pushed back down. So anyone that's in long trade is going to be thinking, okay, maybe it's time to start taking some profit. And then you can see the next day, then the bears, because they see weakness here, bears come in the market and start selling, and then we start seeing the big push down. A doji candle at the top of a trend, which can be a very good indication and an insight if you can spot them. For instance here, sometimes you might see a few doji candles as market just floats around trying to wait and trying for the market to decide who's going to win. You can see here we've had a push up here, we've had a bit of a doji candle, then we roll down to the downside. Let's have a look in other areas here. A little bit of a doji candle. Sometimes they have a bit of a body, sometimes they don't have a bit of a body, but as I said, it's not always going to be perfect. You have to learn how to understand. You can see here, this is a doji candle at the bottom of a trend, price pushing down. Then we've had a doji candle, price isn't sure if it can push down anymore. Then the bulls come in after that, quite shortly after that. So that is at the top of a trend. We'll have a quick look at all the candlesticks at the bottom of a trend. So pin bar is quite important, just as is a shooting star. We've spoken about this a few times. I've shown you different examples of this in the past. Let me just get a trend line on and see if we can see how a pin bar reacts off a trend line. Pin bar can be very good to understand how price is rejecting a level, especially in an uptrend. It's not always about looking at a pin bar for the bottom of a trend. So just look like at here quickly. So just to give you an example, you can see here we've got some support. So we've got a pin bar here, which is indicating the bottom, finding the bottom. It's also, you can see here, just push down. We've created a pin bar, big push down. It's like an inverse head and shoulder, an inverse shooting star. You can see here we've pushed down. Sellers have tried to push down. They've been rejected, and the bulls are pushed all the way back up. Then the next day we've had this bullish engulfing, and then we've took off to the upside. Here we can also see then as we've come down, we've got this sort of support level here. We've had this doji candle, morning star formation, and you can see how these candlesticks, how they work. You can see here straight away that doji candle that I explained. Got this push down, doji candle, market's not sure, bullish engulfing the next day, showing that the bulls are now taking over. 1, 2, 3, morning star formation, bang, then we're off and we're on our way. But pin bar is good for finding the bottom of a trend like this, but just like a shooting star, it's not enough by itself on the lower time frames usually to actually take a trade, because this is just a shooting star. We want to have the next candlestick to engulf it, to show us that this is actually the sellers running out of steam and the buyers are coming in to take over. You want this confirmation candle. Once you see that confirmation candle, it's basically 90% sure that this is actually going to reverse. You can also see here 1, 2, 3. That again, sloppy. It's not always the perfect morning star formation. You can see that sort of morning star formation. So you can see here just the ones that I'm pointing out to you, how we're already starting to see them again and again. Now a pin bar, as I said, is like this. It's like the opposite of a shooting star, but they're not just for actually getting into a trade. If you're trying to find the bottom, we don't want to just get in just here. They're also very, very good for knowing how the trend is acting and how it is, if the trend is going to continue up, continue to the upside or to the downside, with a shooting star. So what I mean by that is, you can see here, what you got is a trend here. So okay, we've got point 1, we've got point 1, we've got point 2, and then you can see we're having a push down. It might look like a break, but we have this sort of pin bar. We pin down, and it's all about this wick rejecting these levels. You can see we've got a pin bar, and then we reject back up. That means that we're not going lower. Price is rejecting this level, and we're now going to go higher. See that pin bar? They're very, very, very strong. Then we push back up again. All right, so we adjust the trend line. Looks like price is broken out here. We're coming down, coming across, consolidating. Price pushes down, pin bar pushes all the way back up. This means that this isn't going down. Pin bar, that rejection of that level. So a pin bar, you can see, is quite strong. Again, they're different shapes and sizes. Here, quite a strong pin bar, big push down on the daily chart, and then a daily bullish engulfing candle. Then again, if we adjust this trend line, you can see here we haven't actually seen anyone when we broke through here, and price has actually ended up breaking down. But the pin bars are a very good indication of knowing when to stay in a trade if you're in a long trade, because they come down, they spike to the downside, and then they push back up. What you find with pin bars is they're very good at trying to trick people into taking a short trade, but what happens is you can see them again and again. This sort of pin bar here, we have a push down and then it pushes back up. A pin bar here and it pushes back up. So if you see a pin bar, you have to they're very, very strong. And let me just zoom out onto the daily. They're very, very strong. Let me just have a look here on the daily chart, zoom into some price action that we've seen more recently. If I drop down to the 4 hour, actually, I believe we'll get some good examples of pin bars here, and we will. So see here, in this uptrend, there's lots and lots of pin bars here. Every time it looked like the price was breaking out of this trend, we've had a pin bar. You can see we've got a pin bar, a sort of pin bar here. I'll zoom in a bit more so you can see this. We've got a pin bar here. We've got a pin bar here. So price is pushing down, but then it finishes as a pin bar. It means price is going higher. Pin bar broken down here. Big wick. It means big rejection. We're going higher. Then we can see that we've seen it again with one here. Let me actually get rid of this trend line for a second. But you can see how well it does to help you understand about staying in a trade. Sometimes you could be in a trade and see a big push down and you think, oh, it's starting to reverse. That's why you have to wait for the candlestick to close, because it can just finish as a pin bar. So you can see here that we've got one here, we've got one here, we've got lots across here, 1, 2, 3 here, we've got a pin bar here, big strong one, we've got another one here, and you can just see on an uptrend, just keep watching them and just seeing the wicks, and it gives you the understanding of what the trade or what the trend is doing. If you can just stand back and look, you can just see there where the big wicks, big wick there, big wick there, big wick there, big wick here. And also it's the same in the opposite direction. Using a pin bar, remember upside down is a shooting star. It tells you about the trade staying in the same direction. So you can see here we're coming down. Just bring this in a bit closer. Here is a perfect example, and this is a perfect example even to take a trade if you're not already in it. You can see here we're coming down, 0.1, 0.2, coming down, bit of a doji candle, evening star formation pushing down. We've sort of consolidated over. See this perfect shooting star? So here you can see, this is what I'm going to get to in a minute, that price action alone is very, very strong, but if it's just floating in the middle of the chart, we don't know what it's doing. It could just be in the middle of support and resistance, which means that price action isn't that strong. Where price action is at its strongest and where magic happens is when you combine price action with trend line, support resistance, and our key level support and resistance. So you can see here quite simply 0.1, 0.2, 0.3, come up here, shooting star formation on the 4 hour, and how easy that was to take a short there, and then bang, we come down to the downside. But that just shows you there what I'm saying about even if you're in this trade, you can see price looks like it's going to break through trend, then it closes as a shooting star. It's like the vice versa of a pin bar. It means we're going to carry on going down. Similar like this. You see, do we have any more examples on this downtrend? Don't think we do at the moment. At the moment, possibly. You can see here, Euro GBP, you can see we're trying to break out. We've got a bit of a doji candle here. We could have something like a shooting star, and it's just confirming that the trend is actually still going down. But that's what the basic fundamentals of a pin bar are. It's the opposite of a shooting star, and they're very, very strong. Morning star formation, most of you will know what this is now because we talk about it so often in the group. But morning star formation is basically the opposite of an evening star. It's looking at that 3 candlestick pattern. Here is a good example of one. Just get rid of this. See here, 1, 2, 3. We have a bearish candle drive to the downside. Then we slow down as we have a doji candle showing that price has slowed down and is indecisive. And then the third candle is a bullish engulfing. The stronger this third candle is, the more higher probability it is. So if this bullish candle can break above the first candle of this pattern, then it's even stronger. But morning star formations are very, very good for finding trend reversals. Also, when I say finding trend reversals, it's also good for understanding when to get out of a trade. If you're in for instance, if you're in a short position here and you're holding a short from the top, and then on a daily chart you see that we've got this morning star formation, it will make you think, okay, it looks like we're coming to the end here. So then you can take more profit or close your trade. So then it's not just about getting into a trade, it's also understanding when to get out of a trade and understanding when a market is coming to an end of a certain move. Let me just go back to where are we? So that's morning star formations. Tweezer bottoms, that might be a bit harder to find. I said they're not too common on the daily. We drop down to the 4 hour chart. Let's have a look here. We drop down to the 4 hour chart because it's a bit more spiky. There's a bit more price action. You see them a bit more often on the 4 hour chart. But again, still, maybe even a 1 hour chart, you see them a bit more often. You can see here, sort of tweezer bottoms, 2 pins to the downside. It's just showing that there's been 2 rejections of an area. So then if there's been 2 rejections, 2 sharp rejections, then there's a higher probability that price is going to move away from there. You can see here, this sort of tweezer bottoms here. Let's have a look. You see here, tweezer bottoms here. Let's see if there's any more sort of tweezer bottoms here. Just imagine 2 tweezers, 2 pins is basically what it is. So you're looking out for these 2 pins. Tweezer tops here. Yeah, as you can see, as we're coming down, we're coming back up. Evening star formation. So you can see just by following this trend here, and by following the candlesticks that I've told you, it's letting you know what price is doing and how it's moving. Pushing up here, evening star formation, another evening star formation, forming a double top, which is a pattern which we're going to get to in the second webinar. You see a double top. Then this is now telling us we're combining candlestick formations with a pattern. So it's making it more higher probability. Then you've got a shooting star here. As you said, we know that was also combining with a trend line. So we could see here that was a good opportunity to take a short trade. So these candlesticks are used time and time again. They're very, very powerful, very, very simple, but you just have to learn them off by heart. Let's go back to just where I've got that drawn. So just go over it again. Shooting star, you've seen how powerful that is. Evening star formation, the three candlestick formation, very, very powerful. Tweezer tops, we're just showing you, they're also very powerful. These are the most powerful candlestick formations. Bearish engulfing and doji, they're all the signs of reaching the top of a trend and that can be coming to the end of a trend or of an uptrend. The bottom of a trend, signs that we're coming to the bottom of the trend, and also signs that we can maybe get into a trade is everything that I've shown you here. The pin bar pushing down to the downside, rejecting that level, morning star formation, tweezer bottoms, bullish engulfing, and doji candles. So they are basically ways of finding tops and bottoms of trends. Now, obviously, finding tops and bottoms of trends are what can give you the most amount of gains, profit, and pips, and so on. But what we also now need to understand is where to use price action. So where to use these candlesticks that we see. So what we want to do mainly is, if you've got a resistance and you've got a support, sometimes we can be trending. We can be trending higher. It can come down, and we may have a target which is to hit this level here, this resistance. If we're seeing a candlestick like on a 1 hour, if we see a shooting star, a lot of people get spooked out by these and they think, oh, I see a shooting star, it means that the trend's going to reverse. I'm in a long trade, I'm 20-30 pips up in profit. I think it's going to reverse, I should get out, and so on. And they get really worried about what they should do. But in reality, this is the market basically scaring you a little bit and getting people in and out of the market. If you see a shooting star here, obviously we expect the market to push down a little bit if we're trending higher, in order to come back up higher again. But the place where we really want to be looking at candlestick recognition is at these levels here, at resistance and at support. That's where we want to be watching and not really pay too much attention in between, especially if it's really low level, 1 hour, 30-minute support and resistance. We want to be watching it around the key levels, but also watching it around the key levels will have a higher impact. So as I said, candlesticks are stronger on the higher time frames. Support, resistance, and trend lines are stronger on the higher time frames. Now combine all of those together, and then it's even stronger. So if you combine a daily shooting star of a daily or weekly support or resistance, then you're going to find that there's going to be an even bigger reaction and an even bigger possibility of this trend reversing and pushing to the downside. So let's just have a look at that. Let me just clear this. Let's have a look and see if we can find some examples. So let's have a look actually on my chart, which has already got support and resistance levels here. Now, Euro GBP actually has a few more than normal. It likes to work between these 100 and 200 pip ranges. But what you can see here is if price is sort of floating in between, for instance, here, this is a good example. So we're in a bullish trend. We've had a daily, this is a very good example. We're in a bullish trend. Daily, we've got this shooting star. So we can say, okay, well, shooting star, we've noted that at 10 o'clock. We know that the trend could reverse because of a shooting star. But what we want is a candlestick to confirm it on the next day. But the problem here is that we've got a shooting star, but it's just a shooting star in the middle of a support and a resistance. Here we don't really want to worry about shooting stars or reversal candlesticks if they're in the middle of no man's land. What we want to be worrying is if we see a shooting star like that off a support level of resistance, or off a support level or hitting off a resistance. What you can see here, how we've reacted off this resistance level here and a bit of a shooting star, and we've pushed down. But here is sort of spooking people and getting them to get out of the market. Try not to pay attention on the 4 hour and the daily chart of price action if it's in between key levels of support. If you've got a daily level of resistance and support and a weekly level, allow price to do its thing, allow price to swing, allow price to come down and go back up and go back down and come back up, and don't get worried about every little candlestick. Where you want to be looking at candlesticks is at support levels and resistance levels. You can see here support levels daily, look how powerful this is. So just having your levels and waiting for price to come to those levels. You can see here we've come down, daily pin bar, really nice tweezer bottom here. See the 2 pins? We've actually also 1, 2, 3, a little bit of a sort of morning star formation, but here come down, tweezer bottom, push below the last low, tap the support level here, and then we've taken off. And this is why we hold our trades, because you never know how far we can actually go. We've taken off here. But you can see how when price is sort of in between, see here how we've had a reaction here and we've pushed down, but then we've pushed back up again, because it's not reacting of any sort of level. You have to have your support and resistance levels, and then that's where you want to be watching for price action and watching to get either in a trade or to get out of a trade. You can see here how the biggest moves sort of happen off support here. You can see weekly support 0.8800. We've come down, a bit of a pin bar here, and then we've moved back off. If you see all this choppy price action in between, if you're in a long trade, you don't want to be worried about that. Just let it continue, let the trade breathe, and let it go to your target or the next resistance level. Then if you start seeing shooting stars and stuff like that around these sort of levels, then you want to be worrying and start looking at maybe what you want to get in or out of a trade. But you have to remember, the candlesticks of daily levels are more powerful than on, for instance, if you've got, you can put support levels on the 4 hour or the 1 hour chart. They do work obviously, but they're more powerful. The higher the time frame, the more stronger the candlestick's going to be, and the higher the time frame of support and resistance, the more of a reaction you're going to get from that. So sometimes you can have a bit of a, it's actually worked really well here on the 4 hour charts, but sometimes you can have on charts, you can have a 1 hour support or a 4 hour support, and it doesn't really work, it doesn't really react off it that well, because the lower the time frame with the resistance and support, the more chance of it breaking through. So if we're looking at taking a trade and we see that price action is creating a morning star on a key level of support, then we want to be taking, there's a high probability in our favor of taking a trade. For instance, here you can see we come down to a support level, pin bar here, that's our first sign. Next day, doji candle, we can see that price is slowing down. We can drop down to the 4 hour and we can look if there's entries for a long entry. But we want to be there's a bigger reaction. See the big reaction we've had here? There's a bigger reaction if it's off a key level of support. If you're looking on the low time frames, there's a good chance it can break through. So they are the key levels of, they are the key sort of candlesticks. So once you get them learned off by heart, I said there's not many there. It's quite easy to learn. Let me just go back. It's quite easy to learn, but it's then about how, as I said, how to use them. What you want to do then is you need to go back, have a blank chart, look through all of the sort of old, all of these candlestick formations, just see how powerful they are, do some back testing and see how they work. But really, these are the only ones that you sort of ever really need. Now, I mean, with a clean chart, as I said here, with a clean chart, there's not much structure, so you really want to have your daily support levels, daily support and resistance levels. You can add those on, so you can have a support level there, a resistance level here, and so on. And then you can start looking back through and seeing how price reacts and what you would have done, or even as the market plays out on different currency pairs, have a look at what happens on the daily chart, on the 4 hour and the 1 hour, and then come back or save the daily chart and think about what your trade would have been or what you're thinking about. See, is it reacting of a level of resistance or support, and then come back the next day and see, did the trade work out the way you thought of. But what we also are looking at as well, we want to add into this, is the trend lines. Trend lines are very, very, very strong levels of support and resistance, as I've explained before, and we've seen how powerful they can be and how strong they are. So take a back test, look at the candlestick specifically that I've told you. Many of you will know them already, but as I said, we just want to go from the basics, then we're going to build on top. So go back, look, get an old chart, clear it all off, go back into the past history, and then just see how well these candlesticks, just these candlestick formations alone, can actually work. Just by finding a level of a level of support, as you can see here, and then waiting for price to sort of come and react and show us the signs. Like I always say, we're waiting for signs for price action to show us. Here you can see morning star formation, then another morning star formation, which means that we've had a double bottom here, a double bottom, and so on. So they're the main candlesticks that we want to look at. And then next, what we need to go on to then is also using these candlesticks along with formations. So I'm going to go over one formation today just to start off with, and then we'll look at the next formations in the next webinar, and then we'll start looking at patterns and so on. But one thing that I want to show today is, because I talk about it quite a lot, so I want to cover it today, is the head and shoulders formation. It's very, very, very powerful, and it actually happens probably a lot more than you realize. It's a very, very good tool for taking a trade and for understanding the next move in the market, reversals, and so on. So head and shoulders formation, let's have a look here, and also how to use the candlesticks with it and what it's telling us. So for instance, here we can see we've got this sort of we can't really see an inverse head and shoulders too well here, but it depends how well you train your eye. Here we can see we sort of got a push down, another push down, and another push down. So I can tell that on a lower time frame we're going to see a bit of an inverse head and shoulders here. If we drop down to the 4-hour chart, what we can see, many people will think, okay, well, I see a head and shoulders here. This is a bit of a left shoulder, a head, and a right shoulder. But the way that we can get sniper entries is by delving in even deeper, because this is a head and shoulders formation. Even here, most people would look at left shoulder, head, right shoulder. But then I can also see here that we've got another one here. If we look here and we zoom in, we've got a left shoulder, a right head, and a right shoulder. And then even again, if we drop down to the 1-hour chart, I can see another one. See here? Left shoulder, head, right shoulder. So these happen time and time and time again. And what it basically is doing, I'll get a bullish version for you as well and explain it. But you can see here, this is a reversal sign. So we can see here that price is pushing down, create the left shoulder. So we push down in the market, we've created a support. Then we push down one more time. As you can see here, we've got this sort of shooting star formation here. And then we've had this bullish engulfing. So we're pushing up, but the market needs to come back, and usually comes back to retest that one more time, this level. So we've found support here. Second time, we've actually broke through it, but pushed back down and closed below. And then on the third, we come back for a third and final attempt to try and break through. If we see rejection here, and then you see here 1, 2, 3 morning star formation, this is a perfect combination to be able to take a trade. So 1, we know that we've got support here. 2, we can see that we've got this head and shoulders formation. 3, we can see that we've got 1, 2, 3 this candlestick formation. So then that gives us 3 confidences for taking a trade. We can also then, what we always need to do is jump in and out of time frames to try and add more confidences together. Then what we could have done here is add a 4th confidence. We've got this 4-hour pin bar, because on the higher time frame it's stronger. So we know there's been a rejection there, and as we came back down to test it again, we can see this sort of pin bar rejection one more time on the 4-hour chart. Then on the daily, we have a look at this. The daily was a big rejection as well, and then we've pulled away from that level. We can see here inverse head and shoulder and a head and shoulder is a reversal sign, but you can drop down to as far as 1 hour and even the 30-minute chart to look at these sort of formations. And then that's how we get the best entry, looking in on the lower time frames and seeing how close we can go to see what we can see. If I go back to the daily chart here and we look at the top of this trend, so on the daily doesn't show anything too much, but we'll probably will see some sort of a head and shoulders formation. So again, people probably say there's a head and shoulders formation here, which there is. Perfect. You can see here, so we found resistance at this level, found resistance again, managed to break through, found it as support, sort of played around. As we broke back down, we came back and retested it. We came back just to make sure that we couldn't break above, and then we broken down to the downside. But that's a 4-hour chart. Entering here is good for a good trade. As you can see, we've had a big push down, but you know that we like to get the sniper entries. So let's have a look on the 1-hour chart. So we can see here, again, it's not always going to be clean. You have to learn how to spot them. You can say, all right, on the 1-hour chart, I see a head and shoulders here. Or even you can bring it down to there, sort of left shoulder, head, and a right shoulder. Even around there, you can see it's quite sloppy, but you can see here we've made a resistance, put the resistance on. We've had this resistance twice here. We've broken through, and then we've come back down, broken through, but then we come back up to retest this level one more time, just to confirm that price doesn't have the strength to push up higher. So then this is a great opportunity to take a short trade. But like I said, we like to get the sniper entries. So instead of getting one down here, we could get one here. But let's look on the lower time frames. Is there any more opportunities? There can be. We can use all different time frames to build our bias. And now you can see here, 30-minute. Watching this, what do you see here? Left shoulder, head, right shoulder. Now this is a great combination as well here, because you can see here we've had this drive up, came back down, made a head here. We can see we've got this sort of hanging man formation, another hanging man formation, which is another thing we'll cover in the next webinar. But we've broken down below this level, but then we come back and we've rejected that with this shooting star formation here. Then you can see we've had this sort of bullish candle, then this doji candle, which then shows the indecision. We often see a doji candle before we see the big drop, and then bang, we've come down. But you can see here that we've got this inverse head and shoulders level, this head and shoulders formation. And by looking at this on the 30-minute, even if we flick back out to the 1-hour chart, I said you want to keep flicking in and out of different time frames to see what we're seeing. So even though you're on the 30-minute chart there, you want to then flick back out to the 1 hour. You can see that we've just rejected this head and shoulders formation with this big spike here. A bit of a shooting star, a bit of like a sort of doji candle, but it's like a shooting star. Big wick to the upside, rejecting that resistance. Then here we could see that price was failing to go higher. Then boom, we came down. 1 hour bearish engulfing. You want to sell on that and then come down. But again, you can see here just simple price action and understanding patterns. 4 hour head and shoulders is a very powerful, sorry, not 4 hour, but a head and shoulders pattern is very powerful. But you don't have to look for it just on a daily and 4 hour. You want to look for it on the lower time frames. Again, the weaker the time frame, the lower the time frame, the weaker it could be. There's a higher percentage of this candlestick actually breaking through, because this resistance on the lower time frame is weaker. But should you get the candlestick recognition that we want to see, knowing it off by heart, seeing a shooting star, then you can say, right, there's a very good opportunity here to take a short trade and then ride this one down. It happens time and time again. If I clear this chart off, I can pick more or less probably anywhere in the chart. Let's just look at this high here, just see if it happened here. This evening star formation. Sorry, this chart, where were we? Yeah, let's have a zoom in here. It happens time and time again. It's just training your eye to be able to see it. You can see here, we made a left shoulder, head, came back, retesting that right shoulder. Everybody in this group probably knows what head and shoulders formation is, but don't really understand how powerful it is until you're told that it's one of the main things to look for, which I'm telling you now. Head and shoulders, inverse head and shoulders, along with price action, is golden. Obviously, seeing these levels there, seeing these things react off key levels of support and resistance or a trend line heightens the power of it even more. So seeing it just like this is great, but if you see it react off a support resistance, let me go back to our actual chart. I'm sure that we actually did see something like that. For instance here, let's see, do we have a head and shoulders here? You can see that when we had that reversal at the top here, we had off 0.9300. Again, it's a key level, so we know that if we see reversal signs here, it's not like seeing a reversal sign here. There's a higher probability, so then it gives us more confidence for taking the trade. Drop down to the 4 hour. Wasn't as clear of a head and shoulders here. We can see again 2 head and shoulders. We've got this one here. I think this is the one we just covered. But you can see here, if we drop down to the 1 hour, that we have these really, yeah, this is the one we just covered. You can see here, if it's happening around a key level of support, you can see here we had that sort of 1 hour head and shoulders, left, head, right shoulder, and then we had the one on the 30-minute, which I just pointed out, left, head, right shoulder. If you're seeing these around the key levels of resistance and support, they become even more powerful, and it shows you it's a reversal sign. A head and shoulders formation is a reversal sign. So if you see that around a key level of support or resistance, then the probability of the market turning from around that level is even more, has even more probability. See here, head and shoulders, left, head, right shoulder. Once you, I'm just telling you these today. I said many of you will see it and know it very, very well. But train your eye to see them even more, because they are very, very powerful, and we talk about them a lot. And then after these basics, now we can go on to the more advanced things in the next webinar. But today was just to basically cover those candlesticks as explained, so you know exactly what ones I'm talking about for anyone in the group who is new or doesn't understand the terminology behind these candlesticks and what they are. We can see what those candlesticks are now, why we use them, and the sort of psychology behind them. And then we're starting on patterns now, and so you can see how powerful patterns are. And we're going to start moving into more as we go on to the next webinar. But basically, from today's webinar, you use those candlesticks that I've shown you. Go onto some charts, put on trend lines, put on your key levels of support and resistance, and just backdate and see how powerful the market reacts using just those candlesticks I showed you, none others. And yeah, and what happens, and keep watching and what happens, and do your homework and basically fully understand how to trade these and how they work. You can see how powerful they are. You can see they happen time and time again, and the market just constantly repeats itself. It does the same thing again and again and again. You just have to have belief in what you're doing, have belief in the candlestick recognition, and things like the formations, because at times when the market's moving, it can seem like that it's not working out, but you have to have belief in what you're trading and what you're seeing. The candlestick and the price action is very, very important. So sometimes people can say, all right, well, I've seen a pin bar, but I'm not sure, I'm going to wait, and then the market will move away. But you have to be sure of yourself and be confident, because if you look back in time, which I want you to do, you'll see how these work time and time and time again. The head and shoulders happens time and time and time again. It wouldn't be known as such a thing if it didn't work. Like, I wouldn't be explaining it to you or be able to pick out anywhere on the chart that the head and shoulders formation happened time and time again, or that when you see a shooting star, the market reverses, or when you see a pin bar, the market pushes back up. It happens time and time and time again. So when you see it, have the confidence to take the trade. That's sometimes what the problem with people's problem is they see the candlesticks, they know what they are, but they don't have the confidence to trade them. So using what I've shown you today, just do some homework, do some back testing, just draw on some trend lines, watch how on each touch of the trend line, how it probably is a pin bar, if it's in an uptrend, or in a downtrend, how you probably see an evening star formation reacting off the trend line, a shooting star. You see the same 4 or 5 candlestick formations that I've shown you today happen again and again and again. So what I want you to do is go back into and do some back testing. Even if you have a clear chart like this, just go back into the past, draw on a trend line, and just see and just get yourself confident with what I've shown you. Very, very simple, but I just want you to get the confidence in seeing that, yes, he's right. Every time the market reacts, we see one of these candlesticks. So that when you see them in the future, you have the confidence to take the trade when you see these sort of things. When you see these pin bars react off here, you have the confidence to take the long trade, and so on. And I'm just looking for different examples and stuff, but you can see here, as I said, like you can see this, if you put on this, if you go back into time and have a look, you can see this pin bar. Have the confidence to take the trade once you see that pin bar, because you can see here, price history just shows it works again and again and again. These things just history repeats itself. You can see here, head and shoulder formation, left head, right shoulder, shooting star at the top of this. I can go around all day on the chart with just what I've told you and pick out millions and millions and millions of examples, because it happens time and time again. You can see here, evening star formation at the top of a trend. We've got a head here, came back down, and you see here shooting star, then we sell off. It happens again and again and again. Quite basic webinar, because we're only covering a few candlesticks, but I want you to learn these off by heart. As I said, go back in time, see how they react off supports and resistance levels, see how they act off trend lines, and start implementing and start picking out and start noticing where there's an inverse head or a head and shoulders formation, and see how well they work off those. And then once you get that off by heart, then we can start moving on to the next thing. So that's about it for this webinar. As I said, it was just to basically talk about specific, very, very specific candlesticks that we use time and time again. And it's basically also because anyone new to the group, or anyone starting a group, or anyone that's been in the group from the start, just to develop on top of the last two webinars, me explaining these candlesticks just are like a way of understanding that this is something that we look at time and time again in the group. So I want you to learn those ones off by heart, and then we can push forward with the next thing. So I'm going to post this up for you guys now, and I'll speak to you soon.